Welcome back, and we have TCS's numbers flashing at the bottom of your screen. There's a special dividend of 46 rupees, but let's talk about the top line first off. The top line was marginally better than what we were penciling in. 67,087 crore is the number that we've got with regard to TCS, which is a 2% sequential growth. Profit after tax is down, but honestly, it's the EBITDA number which surprises on the upside. The EBIT number, rather, that surprises on the upside. 16,743 is the number we were working with. We have got a 16,889 crore EBIT number, which is again marginally better than the number we were working with. We were working with an EBIT margin of around 25%, but it's come in at 25.2%, which is a flat number sequentially. So that's broadly the first take with regard to the numbers. We'll obviously wait for more numbers to start floating through or coming through with regard to constant currency number. I'll just quickly pull that number out as well and try and get a sense as to how much of an impact has currency made on the numbers. Aditya Shah joining us this afternoon, founder, Hercules Advisors, with regard to TCS's numbers. Aditya, your initial read of the numbers of TCS?
Yeah, so has a steady set of numbers, nothing on the upside, nothing on the downside, particularly for me. I expected it can't be that great, but these are steady numbers. I don't think there is any surprise here. The EBITDA number and the margin number looks okay. It is not as bad as people were expecting. So my opinion is not too much move upside or downside for the stock as well. Steady numbers. Now we need to watch what is the deal wins, what are the deal wins that the company had this quarter, what is the guidance with respect to how is the mood within North American market, and what is how the management foresees the next 2 to 3 quarters. That will decide what does the stock price do. But as of now, the numbers remain very steady.
There's a 2,128 crore impact of the statutory new labor codes which have been put into effect, and that has obviously had an impact on the number. There's also a provision for legal claim of 1,000 crore which has impacted the bottom line number of profit after tax, and that has come in slightly softer than what we were penciling in because of those two adjustments that have come through. So maybe those couple of pieces is something that we need to look out for, not just with regard to TCS, but with regard to the whole IT pack. And given the kind of base in terms of employees that the IT companies have, this is something that we'll have to keep on our radar. I'll read out the note very quickly to you. On the 21st of November, Government of India notified 4 labor codes. The Code of Social Security 2020 and Occupational Safety, consolidating 29 labor codes. The group has assessed and disclosed the incremental impact of these changes on the basis of legal opinion obtained, and this has been disclosed as an exceptional item in the consolidated interim profit and loss account for the period ended 31st December 2025. The incremental impact consists of a gratuity impact of 1,816 crore and long-term compensated absences of 312 crore, primarily arising due to change in the definition of wages. The group continues to monitor the finalization of these rules, and thereafter appropriate accounting effect will be given on the basis of that. So what we are seeing is essentially that PAT is a miss, but that's largely because of what I just read out to you. It's 11.7% lower QOQ. That's the profit after tax number, and this is the reason why. Let's also, Aditya, talk about how you're viewing IT as a whole, as a basket, before I come back to you with regard to the numbers. Do you believe that IT is at a point where we could see it outperform in 2026?
So Harsh, it is largely dependent on the sentiment between the India and the US. If a trade deal is struck between the two countries, I believe IT will, the sentiment on IT, businesses will take time to recover. But I think the sentiment on the IT stocks, which has turned sour over the period of last 2 to 3 years, would start to become positive. A lot of these stocks have seen a valuation derating. From my perspective, I am positive more on the large cap IT side rather than the mid cap IT side. Although mid cap IT will have faster growth, But the large cap IT does provide some valuation comfort. So from my perspective, I'm positive on the large cap IT space. Everything would be dependent on how things move forward between India and the US.
I wonder if you have a view with regard to how much of a role currency has played in the numbers that have come through. Do you believe that currency has had a large impact on the numbers?
Yes, definitely. The rupee has seen a depreciation, and that would have aided the growth. However, even if you look at the constant currency growth, I don't think there is a huge disappointment there. I suspected that the growth would be far lower, but in my opinion, the growth is fairly okay. It is not as bad as the market, the sentiment in the street really was. So from my perspective, okay is kind of a number, nothing to be excited about or nothing to be disappointed about as such.
Okay. And how should one, Aditya, look at the margin picture, therefore? Do you believe that margins have surprised on the upside, given the fact that the consensus on the street was penciling in a margin of 25%? It's coming marginally higher at 25.2. But what does that mean? Can TCS hold on to the kind of margin that they've clocked this quarter, in your opinion, even going forward?
Yes, margin 10, 15, 20 basis points here and there. I don't think that that is in control of anybody. That is backdrop of a lot of things. From my perspective, 24 to 26% is where I expect the market to be. Some quarters above 25, some quarters below 25. But broadly, that will be the range that TCS has seen and TCS will see over a period of time. So I'm not too much surprised by between 25 and 25.3. That is fairly okay. What this does tell us is that a little bit of pressure with respect to the deals is not there. And from my perspective, this is a little bit of a positive, but net, not surprised too much. 25.3% is fairly okay.
Okay. The other piece, Aditya, is the fact that we're starting to see annualized AI services revenue being disclosed by TCS. It's at $1.8 billion, which is up 17% QOQ in constant currency terms, mind you. That's what they've disclosed. That's a big one. With regard to AI services, are you going to likely start to see IT participate in a bigger fashion within that AI services landscape, in your opinion?
Some companies have started to disclose their AI revenues, and of course, the AI revenues will be a faster piece of growth for most of the companies as the sector is really growing. I believe that the sector will grow. Most companies will clock up 10 to 20% growth there year on year. So that is really positive, and it is good that TCS being transparent enough to disclose their revenue from the AI from AI. So from my perspective, positive. This is a space that we have to watch out for. The company that sees the march here will be the company that will continue to do well, and TCS, for that matter, has done well with respect to its AI services this quarter.
Okay. I wonder what constant currency growth rate is, and I'll pull that number out for you, the viewers. 2% lower QOQ with regard to employee headcount. So that has been steadily reducing, Aditya. Is that the way in which you see this going forward as well, in terms of how IT services companies start to evolve in this new landscape? Do you continue to believe that there will be a taper down with regard to the kind of employee base that they have?
Of course, 2020 was a time when a record number of hirings were made, and 2026 is a time when a lot of people are being laid off by these companies as demand continues to slow down because of the geopolitical problems that the US and India especially are facing with respect to each other. So from my perspective, at the time when there is employee retrenchment, that may not be the perfect time for the business, but that is a good time to buy the stock. So from my perspective, these are signals that a broad bottom is being formed. The bottom formation is a process, and it is not a 1 quarter, 2 quarter job. So that process is in place. Of course, the demand has slowed down. Everybody knows it. There's no surprise as such. So from my perspective, of course, this is a business negative in the shorter term, but in the longer term, it's a signal that the stock price will bottom out somewhere here, and from there on, if you are a long-term investor with 3 to 5 year time horizon, that is where you need to bet your punches on IT.
Aditya, thank you so much for coming in and speaking with us. Such short notice and those TCS numbers coming out. Viewers, as promised, we have the constant currency growth numbers QOQ which have come through. Snehi and Ishika have pulled these numbers out. 0.8% higher on a constant currency basis. QOQ is how TCS has performed. When you're looking at the dollar revenue, it's up 0.8%. The expectation was it would go up by 0.5, so there's a positive bias to that number as well. In fact, more than a bit of a positive bias. So it's not just the currency tailwind which is aiding the top line, it's also the CC revenue growth which has come in at 0.8%. So positive there. Let me bring on board Sudeep Bandyopadhyay, who's market expert, to talk to us about those TCS numbers. Sudeep, how are you viewing the constant currency growth of TCS? 0.5 was what the consensus was working with. It's come in at 0.8. Is it meaningfully higher, would you reckon? How should one look at the top line in constant currency terms first off?
Harsh, I think this is very good.
Okay.
Because we were expecting that mostly the revenue growth will come out of currency depreciation, but the constant currency revenue growth in dollar terms of 0.8% is definitely good.
The other piece, Sudeep, is the fact that you've got the annualized revenue coming in from AI services, which is at $1.8 billion. This is annualized, mind you, viewers. That's something to contextualize. It's around $450,000 at a quarterly run rate, 17% up QOQ. Sudeep, you have a better sense of how this plays out. How do you look at this number in particular? And this is something that will likely continue to grow at a faster clip, I would reckon.
Oh, absolutely. I think this is a very good trend. And I think, I must say that this is very, very interesting to look at these numbers. Companies have started disclosing this separately, and I think market would love it. Yes, annual run rate of close to $2 billion, $1.8 billion is definitely good. Of course, a lot needs to be done. And, there is no denying of the fact that Indian IT companies probably missed out on that big AI bull run. But at least they are trying to make amends and move very fast in this direction. Some acquisitions are happening by some of the companies, and I think this is a good trend, and we have to monitor this, considering what's happening all around us.
Okay. Sudeep, thank you so much for speaking with us. Believe